Welcome to Matters Financial, Geopolitical from the Frontier. Thank you for stopping by. I'm always grateful. I took this photograph this morning of the jacaranda trees over the highway. My office is not far from Chiroma Road, and it really is a lovely season, when the jacaranda season, because it's like a carpet of lavender, lilac, and it's just so beautiful, I must admit. Home thoughts, let me give you a Paul Virilio quote. Digital messages and images matter less than their instantaneous delivery. The shock effect always wins out over the consideration of the informational content. I like this photograph of Uhuru Park that Kenya Pics tweeted. I couldn't resist this headline. Japan's top inventor promises amazing sex, killer wigs, and surefire putters. At 88, Dr. Yoshiro Nakamatsu, aka Dr. Nakamatsu, is something of a celebrity in Japan. He's a prolific inventor, claiming more patents than anyone else in history. Some of his inventions, like the floppy disk, are absolutely legit, and he created a suction device that has become a staple in Japanese homes for handling things like soya sauce and kerosene. Others, well, there's a wig with a built-in shuriken for self-defense. Then there's a sex potion, Love Jet 69, that promises orgiastic pleasures and as if that weren't enough, increased lifespan. Maybe they're related. That's a thought. I like this photograph of the sunrise over the old town of Mombasa. Of course, I'm from Mombasa, and if you care to read a couple of stories, I'll put a Mombasa search link up there on Rich Wrap-Ups. Joshua Baldwin strolls around Las Vegas before and during Clinton-Trump 3, which was pretty interesting. I think Trump's shaded it, but it's not sufficient now. He should have he should have pivoted straight after the primaries. He should have stopped insulting everybody, and he might have done better. I think it was a big mistake. And then I think the other side laid a very delicate trap, knowing he was going to go after Bill Clinton, knowing that he had a reputation, and knowing that very few of his employees or his courtiers would confront him about that reputation beforehand. Hillary Clinton, I've tried to run a campaign based on issues. He's run a campaign based on insults. Washington's pivot to Asia, a debacle unfolding. The pivot to Asia meant that the US was extending and deepening its regional military alliances in order to confront and encircle Russia and China. The Philippine pivot to China quickly advanced from colorful rhetoric to a major trade and investment meeting of President Duterte and a huge delegation of Philippine business leaders with his Chinese counterparts in Beijing in late October 2016. So we've spoken about that severally, and essentially Duterte's departure is a serious loss to that coalition of the willing. Gambia's president and renowned wit Yahya Jammeh wants out of the ICC, or the International Caucasian Court, as he calls it. Only in Russia, a rare photo of Vladimir Putin from when he worked as an informant for Starsky and Hutch couldn't resist that. And then there's nobody left in Moscow to sanction except the janitor, says one analyst. Let's move on to the currency markets. Let's have a look at the euro dollar, 109.32, having a little pop higher. Dollar index 98.57. Japanese yen 104.05. Swissy 0.9925. Pound 122.09. The Australian dollar is at 0.7690, India rupee 66.765, South Korean won 1132.97, the Rial 311.26, Egyptian pound 888.25, and the Rand's been firming up late, and I think it's telling us that Gordon is outflanking President Zuma at this point in time. 1372 when I looked last. Euro dollar has had a little pop today up to 109.30, but I still think parity's calling. I'll put up a longer term chart. You'll see once we break down to around the 108 handle, low 108s, it's a steep drop to 103, I think. Australian inflation materially higher than forecast, plus 1.3%. Estimate was plus 1.1% in Q3. That took the Australian dollar higher in the early session. We got above 77. We're now at 76.92. Look at the Australian dollar go, said David Inglis, and you can see the spike. And Aurelia's calling for 0.80. Let's see whether that's feasible. I think short term we've got to pull back a little bit from these levels. Gold 1274 and 13 cents. We broke down through 1300. That's resistance. We bounced off 1250, but I think overall we're going back to those 1250 levels. Crude oil, no longer believing the OPEC hype or Kool-Aid or whatever you care to call it. $49.41. Very soft yesterday. Normally it's firmer on a Monday. On these early days of the week, I'm expecting it to fall back, and I still think there's a huge chance we post fresh lows for this cycle, and that's really a contrarian view. After 5 straight years of declines, Anglo shares are surging. They're up 300% since the end of January and 272% for the year, by far the biggest advance on the FTSE 100 index. Glencore, another mining company, was the next best performer, up 172%. Sub-Saharan Africa, the IMF released their big flagship report. It's called Multi-Speed Growth. Growth in Sub-Saharan Africa looks set to slow to its lowest level in more than 20 years. Lower commodity prices and a generally less supportive global economic environment. Average growth in the region is foreseen to decelerate sharply to 1.5% this year, well below population growth and in sharp contrast to the high growth rates of the past 15 years. While the projection is for a modest recovery for next year to nearly 3%, this is predicated on prompt action to address the large macroeconomic imbalances and policy uncertainty in some of the region's largest economies. Most of the non-resource intensive countries, half of the countries in the region, continue to perform well as they benefit from lower oil import prices, an improved business environment, and continuous strong infrastructure investment. Countries such as Côte d'Ivoire, Ethiopia, Kenya, and Senegal are foreseen to continue to grow at more than 6%. In contrast, commodity exporters are under severe economic strains, including the region's 3 largest countries, Angola, Nigeria, and South Africa. Near-term prospects of oil exporters in particular have worsened, notwithstanding the modest uptick in oil prices as the slowdown is becoming entrenched. Activity amongst these countries is expected to contract by 1.25% this year. Among other resource-intensive countries, growth in the DRC, Ghana, South Africa, Zambia, and Zimbabwe is decelerating sharply or stuck in low gear. Worryingly, in the face of strong financial and economic pressures, the policy response in many of the hardest-hit countries has been slow and piecemeal, often accompanied by stopgap measures such as central bank financing and the accumulation of arrears, and leading to rapidly rising public debt. Saying that, yet more than ever, the aggregate growth number belies considerable heterogeneity within the region. In the broadest of terms, the picture is more of 2 Africas. In one camp are some 23 commodity exporting economies, including the 3 largest in the region, Angola, Nigeria, South Africa, which are under severe economic strains and are depressing the overall growth curve. In the other camp are the remaining 22 economies in the region, which for the most part continue to sustain reasonably high growth. And we've spoken about this several times, this is actually, I found it very realistic, which is AFDB and others have not been, given the changed circumstances on the ground. Sovereign bond spreads in selected African countries, June 2011 to August 2016. It's interesting. And then just to reiterate, the IMF has cut its full-year growth outlook for sub-Saharan Africa to 1.4% from an early expectation of 3%. Abebe Amos Selassie, the IMF's Africa Division Director, warned of nuances within the two groups. South Africa, for example, isn't suffering from macroeconomic imbalances like Nigeria and Angola are. These three large economies are in a bad state, but here I have to be very specific. The imbalance story is more apt to the oil exporting countries. South Africa suffers from a lack of structural reform over the years, and uncertainty that has crept in. He called on Kenya and other countries showing strong growth to build buffers that will protect them from future shocks. The time to fix the roof is when the sun is shining, he said. The IMF cut its growth projection for Ethiopia to 6.5% this year. That's really, could go anywhere, couldn't it? Political uncertainty of any kind is detrimental to robust economic activity, he said. Congolese opposition extension of Kabila's mandate, they're opposing it. And listen to this, if the presidential elections were held today, 33% said they would vote for former provincial governor Moishi Katumbi, 18% for opposition leader Etienne Tshisekedi, and just 7.8% for Kabila. And that's probably extremely accurate. As the pressure on Zuma grows, his actions become more desperate. ISS New South Africa, epitomized by Mandela, was famed for its principles. The government's unilateral decision to withdraw from the ICC is a reflection of how much those principles have eroded since 1994, a process only accelerated by Zuma's administration. Is it enough to save Zuma? Unlikely, but in renouncing international justice and effectively siding with war criminals, Zuma will add another disgraceful element in the history of his disastrous rule, one that hopefully future leaders will be able to undo. South African all shares up 2.08% this year. Dollar versus Rand, it's been on a firming track, and I think that's essentially the toing and froing between Gordhan and Zuma. And Gordhan, who I remember vividly saying to Lionel Barber at the FT conference, welcome to the underground, is proving more adept at navigating that underground at the moment. Egyptian EGX 30 up 17.92% this year, but a massive sugar shortage and soaring food prices are fueling discontent in Egypt. Ghana Stock Exchange is down 12.34%. Ethiopian unrest triggers collapse in tourism, says the FT. A wave of anti-government protests, the imposition of a state of emergency has triggered a collapse in tourism bookings in Ethiopia, underlying the effect the unrest is having on one of Africa's best performing economies. As the demonstrations spread across the country, governments including the US, UK, Australia, Canada and Ireland have advised their citizens all against non-essential travel to the country or Amhara and Oromia regions at the center of the instability. Tourism has become an important part of the economy, which has been growing at an annual average of about 10% over the past decade, as Ethiopia has attracted increasing levels of foreign investment. Government estimates the sector contributes about 4.5% of GDP, or $2.9 billion. The indirect contribution through investment is the same, while about 1.5 million are thought to earn their living from the industry. More than 750,000 foreign tourists visited Ethiopia last year, with the US by far the largest country of origin. Kiros Mahari, the general manager of the Ethiopian Tour Operators Association, said that while there's been some unrest for a while, the situation has been restored back to normal. Emma Gordon, an analyst at Verisk Maplecroft, said such statements come across as unbelievable. The situation is quieter now than a few weeks ago, but the protests have not stopped. She said strikes, ghost town days and non-violent protests are more common now because they're so much harder to police, even under the state of emergency. Ms. Gordon predicted that once the protesters had worked out how to cope with the state of emergency, which bans all protests, political communication on social media and political gatherings, there will be an upsurge in unrest. I think she's right. I wrote about Ethiopia on the 17th of October when I said Ethiopia's reputation is shattered by political tensions. And I said Ethiopia had always loomed large in my imagination from the time at prep school when my Ethiopian friend Asana Haile could not go home and came to spend the vacation with us in Mombasa. I recall reading The Emperor by Richard Kapuscinski, and in that book Kapuscinski recounts the tale of Lulu, Haile Selassie's lapdog that was allowed to piss on the shoes of dignitaries, the courtier whose job for 10 years was to wipe those shoes clean with a satin cloth. The book also speaks to how the cushion bearer, the emperor was very short and therefore had to be perched on cushions so as not to be beneath his subjects, became an all-powerful figure at the imperial court. I think they're going to have to let some pressure out of the pressure valve, but I don't think that they understand that. Mozambique yields hit record after admitting debt distress. Mozambique's bonds tumbled after the African nation, home to some of the world's richest gas reserves, stunned investors by declaring a state of debt distress. The former Portuguese colony will need to restructure its debts with the hope that the IMF will resume aid, according to a 20-page presentation posted late Tuesday afternoon on the Finance Ministry website. Creditors will be reluctant to have that conversation and take the heavy losses, though the alternative is default. President Nyusi's government this year already restructured more than $800 million in loans it received for a fleet of tuna fishing vessels, repackaging the debt as $727 million of euro bonds. To restructure the securities, it will have to convince investors such as Lutz Roymeyer, who bought about $1 million worth of tuna bonds in 2014 and 2015, who believed they were tricked. They couldn't keep their budget under control, and it's their fault, not the fault of the bondholders, and I don't have any mercy for the officials, he said. He said he began buying tuna bonds when the ratio of debt to GDP appeared to be low. Now we know why, because they were fake. The country's debt ratio will reach almost 113% of GDP this year, after $1.4 billion in previously undisclosed loans were uncovered in April. In its presentation, the Finance Ministry took an even grimmer view, putting it at 130% of GDP. Yields on the bonds due in 2023 jumped as much as 583 basis points Tuesday to a record 21.11% in Maputo. The debt sustainability situation in Mozambique is completely dire, said Robert Besseling. I cannot imagine that the bondholders will be delighted by this, but obviously a restructuring will be better than taking a haircut or potential defaults. Exports collapsing, dependence on imports rising. IMF predicts Mozambique will run a current account deficit of 146% of GDP by 2021, compared with 33.5% this year. That would be the highest by far in the world. Romeyer said he has little faith in the oil and gas projections after this big, unpleasant surprise. Officials already knew when they restructured the sovereign debt in the beginning of 2016 that the debt figures were false and they misled investors, he said. And my conclusions are Mozambique from hero in 2014, when I was there for the Africa Rising conference in Maputo, to zero in 2016. It's the most beautiful place, and I've met both presidents, and I think they could have handled this better. This tweet came from Mohammed Welie, really looking forward to see the data post the cap. This is private sector credit growth, and this is a point I've been making several times, and I made again over the weekend when I said credit to the private sector has been slowing sharply, and last registered a plus 7.07% expansion in July 2016. It's slower now. And I said this is a key indicator to watch in assessing the side effects of the Interest Rate Act. Recent moves by the CBK to steer interest rates lower were in part certainly triggered by this sharp slowdown. This is a key indicator to watch in assessing the side effects. I attended the KenGen investor briefing this morning. That's when I took the photograph of the jacaranda. If you're interested in the earnings or the earnings release or any of the dynamics of the share price, the link is there. Scroll down on Rich Wrap-Ups. Albert Mugo said, we are the largest geothermal producer in Africa. Indeed they are. A lot of debate over the fact that they skipped the dividend, which I think they shouldn't have done, but it was explained to us why. It's all about compensating tax. Have a look at this slide. They reaffirm that the dividend policy of 30% of profit after tax is unchanged, but we're in a growth spurt, hence need to pass this time round. Nairobi All Share is down 6.22% this year. Nairobi NSE 20 is down 20.71% this year. Interesting piece in Bloomberg. CEO steps into minefield confronting Kenya's worst bank. This is National Bank. If you're interested in their share price data, have a look at the last link on Rich Wrap-Ups. Once again, thank you for stopping by. I'm always grateful.